The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Laubscher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Laubscher. Thank you so much for joining me for another episode and spending your most valuable resource, your time, once again with me on the show. Everything Cashflow Ninja is at cashflowninja.com. It's cashflowninja.com. We've got podcasts, we've got books, we've got reports and webinars and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. In today's show, I want to talk about how you can get wealthy for sure. And of course, Get Wealthy for Sure is the title of my new book that I just launched. Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably. And I want to start with some gratitude. And I want to express my gratitude and just really thank every single person that supported me with this book launch. Get Wealthy for Sure is #1 on Amazon in 2 categories. So we hit the #1 bestseller on Amazon on launch day, and it stayed there for several days in 2 categories. And in the 3rd category, I think we were #2. So Get Wealthy for Sure is a #1 Amazon best-selling book, and it's all because of your support. I could not have done this without you. So really, from the bottom of my heart, thank you so much for your support. I put a lot of time and effort into this book, and I really wanted to get this message to get out because I think it couldn't be more timely than now to share the message that's in this book. In this episode, I'm going to self-host, and it's going to be me for 20 to 30 minutes. And I'm going to pour my heart and soul into this episode for you in the next 20 to 30 minutes to provide as much value as I possibly can. I think the release of my book, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably, could not have come at a better time. I think this is a message right now that I'm extremely passionate of sharing with as many people as possible, because in the past 12 to 18 months in the alternative asset investment space, there are many projects where investors have lost money in. There are investment opportunities, projects, and just deals where investors got burned and lost some or all of their money. There are deals in carbon capture, water stations, life settlements, coal, ATMs, debt validation funds, real estate funds, private lending funds, apartment syndications, commercial deals, conservation easements, and mortgage-backed lending, and also Bitcoin mining. So there are a lot of these projects where people have lost some or all of their money that they've invested in. So why did some of these investment opportunities, these deals and these projects, why did they lose money? Why did they implode? I would look at the big macroeconomic environment and say one of the big factors that played into just a lot of these deals imploding is interest rates. Interest rates had a massive spike. And a lot of these deals were underwritten based on interest rates that would never go up again. And that was a massive mistake that I think investors, sponsors, and operators have made. You cannot just plan or project the outcome of an investment opportunity based on interest rates just staying where they're at. There has to be planning in these deals involved, that if it spikes up, what does it look like? So that had to go into the underwriting of all of these different deals. So that was a massive, massive factor. The other thing is there's also a lot of inexperienced sponsors and operators that have come into the market. They just don't have the experience in the alternative asset investment clause. And by the way, while I'm speaking and sharing that, I think one of the reasons is been the inexperience of sponsors and operators. Experienced sponsors and operators have also lost money and have deals that where investors lost money. So it's not just the inexperience, but experience as well. And then I would say another reason is just fraudulent actors. And there are, of course, there's fraudulent individuals and groups which are investigated now by the Securities and Exchange Commission. And yeah, there's legal procedures in process against these individuals. So those are some of the reasons why I think some of these deals imploded and investors lost some or all of their capital. And when I say investors, that includes yours truly, myself. I'm going to share something that was really, really helpful for me. This is one of the most important lessons that I learned when I started on my journey 20 years ago. When it comes to allocating and positioning capital, their definitions are extremely important, extremely. And I'll share with you why they are so important right now. So there are four things what you can do with capital, right? You can save it, you can invest it, you can speculate with it, or you can gamble with it. These four things are very, very different, and understanding the definitions and the difference is crucial for you as an investor. Like I said, most important lesson I learned on my journey 20 years ago. So what's the difference between them? So savings, when you allocate capital and money into a savings vehicle, that savings vehicle doesn't have a lot of risk. There's not a vehicle on the planet where there's not some level of risk, but with savings vehicles, there's very, very little risk. There's no such thing as risk-free, by the way. So there's not a lot of risk in savings vehicles, and for taking on not a lot of risk, you get a very conservative and predictable return on that savings. So the goal there is capital preservation. You put capital into savings so that you never ever lose it, and you don't take on a lot of risk. And for not taking on a lot of risk, you're happy with a very predictable, conservative return. But you know that capital that you've allocated there is going to be preserved and grow very, very slowly. Okay, that's the one area. The second area is investing. When you place your capital, your money in an investment vehicle, you are taking on risk, and a lot of risk. The reason why you're taking on a lot of risk by investing your capital and money is in the hopes for a massive return, a bigger return on that capital and money that you've invested. That's why you're putting it in investments. When you're looking at speculating is, it has a bad connotation, or people think about it in a bad light. It is an art form. There's an art and a science to that. Professional investors are very good speculators. There are some of them that are brilliant. Previous guest on the show, Doug Casey, is a speculator. That's what he does. He is a professional. There's an art and a science to it. When you speculate, these professionals, They look at market distortions and or trends that are just bubbling above the surface. They allocate capital accordingly, and they make a massive profit speculating. So they look at market distortions, they look at massive asymmetric opportunities, or they look at upcoming trends, position a capital accordingly, and because of that, they can profit handsomely. You're taking on bigger risk with speculating than you are with investing. The reason why you're taking on bigger risk than with speculating than investing is the hopes of massive, massive returns and profits. Moonshots, basically. The fourth one is gambling. Everybody understands what gambling is. You go and you place bets. Now, it can be strategic. It can be bets that are very well thought out and very well calculated. You have professional gamblers, card counters. You're probably thinking, oh, there's professionals. I understand. I've been in a mastermind with a card counter. So yes, they're out there. I understand that. But understand, when you're gambling, when you're placing a bet, you're going to be wrong more often than you're going to be right. That is how gambling is structured. That is how the game of gambling, regardless of what game you play in the casino, that is how it's structured. The reason why you have 20 people running to your table if you just hit the jackpot in a casino and offering you a room to stay for as long as you want, as many steak meals as you want, is because they know the longer, if they can keep you there and keep you playing, mathematically, the odds are stacked against you and they will get their money back. Okay, those are the four things and very clear differences. So one of the reasons why people get hurt financially and get hurt very badly financially is they don't understand the difference between these four things, and they don't understand when they're doing what. I'll give you an example. People say this, and that I cringe when I hear this. People say, I am saving for retirement in a 401k. Now, can you my listeners and my viewers are very smart. You probably cringe at me just saying that. You're not saving. That's not the definition of saving. You might be investing if you know what you're investing in. Maybe if you're self-directing it, you know what you're investing in, why you're investing in it, what it's supposed to do for you, what's the strategy, and is the strategy being implemented and executed, and is there an exit strategy? If you don't know what you're invested in and you're just funding a qualified retirement plan, out of sight, out of mind, I wouldn't even say that you're investing. I would just say you're gambling at that point. You're placing bets. You're placing a bet that someone that's managing your retirement account, your qualified plan, knows what to do or knows more about that world than you do. And most of the time they do. They don't. So that's one of the reasons, right? So that's why I'm so passionate about the Get Wealthy for Sure book. It's a message in there that's going to demystify all of these different terms that's thrown around and share why people are struggling financially. Now, I'm also going to say this, that in the investment world, let's talk about investing for a second. In the investment world, there are several avenues that you can invest. You can invest in Wall Street. You can invest in the alternative asset world. You can invest in, those are two different avenues, separate, right? And I'm just going to say this too. I know people that have done very well investing in Wall Street, and I know people that have done very, very well in the alternative asset investment space. I also know people that have lost a lot of money and gotten financially hurt in Wall Street, and I know people that have lost money and gotten hurt in the alternative asset in investment market. Many people by default in life start or just stay or just they continue to stay there in the Wall Street world as far as investing, because that's what everybody's told them what to do, right? So that they start there and they just stay there and that's it. They only stay in one avenue. And then as there are market cycles, as there are in every single market, there's market cycles in Wall Street, there's market cycles in all of the different asset classes in the alternative asset investment world. As market cycles basically complete, you see crashes, you see market crashes. And over the past 25 years, we saw massive market crashes in the Wall Street world in the beginning of the 2000s, and then obviously 2008, 2009, we saw the great financial crisis. And the alternative asset investment space also got extremely badly hit during the great financial crisis. It went across all of the different worlds. But the people that got really hurt financially in 2008, 2009 looked for alternatives to Wall Street. So they ended up in the alternative asset investment world. And if you think about the market cycle since the great financial crisis in 2008, 2009, the great financial crisis happened, mass chaos. We all remember the Lehman Brothers moment, people walking outside of their offices with packed up boxes. Lehman Brothers closed. That was the moment that everybody knew the crisis was there. Most people forget that earlier that year, you had the Bear Stearns moment where Bear Stearns went under and was absorbed by JP Morgan Chase. But Lehman Brothers was the moment that people remember, this is it, this is here. The crisis is here. Then it took to about 2000 and I would say end of 11, maybe beginning of 2012 to bottom. And then that was rock bottom. Smart money moved in, all the professional investors went in, and we have had a run since 2012, an incredible run. I would make the argument up until the end of 2022. That's when, with the interest rate spike started to happen, that's kind of when the run was over. And we're still seeing an ocean of liquidity out there propping up markets and holding up markets. But in my view, as far as where we are in the market cycle, yeah, we're ready for a significant drop in all markets across the board. Again, the Wall Street world, as well as the alternative asset investing world. A lot of people that came from the great financial crisis, leaving the Wall Street world, coming into the alternative asset investing world, they have never seen carnage in the alternative asset investing world. And was a lot of belief that can happen in the alternative asset investing world, what happened in the Wall Street world. So I'm just going to share with you that you can lose money in both of these worlds in any investment avenue. And you have the same things going on in every single market, same market dynamics. So what I like about the alternative asset investing world personally is that you have a lot more control. You can directly invest in projects and deals with sponsors and operators that you know, like, and trust, that you can personally vet and do your own due diligence. I like that control. And then also, I get the benefits of cash flow, tax benefits, the appreciation of the assets if the execution is good by the sponsors and operators. And then, of course, the leverage, right? Because you get to invest with amazing people and you get to leverage their knowledge, their skill sets, capabilities, their networks, and capital. So you can invest as a group of investors. So I love all that about the alternative asset investing world. But you can lose money in both of these worlds. And I think people are starting to realize that because you are investing. So the main point here is when you are investing, you are putting capital, money into an investment vehicle, and you're taking on significant risk. And you can, anytime when you invest, lose some or all of your capital. So anytime you hear investment pitches for things that sound very, very exotic and exciting, it's great cocktail party conversation, or it's get rich quick. Just remember that you could lose some or all of your capital and your money invested. And by the way, just in my experience over the past 20 years, um, be very careful of exotic things. Exotic financial vehicles and exotic financial investments. It's a lot like exotic food. It might be exciting when you're enjoying it, but you don't know what's going to happen 24 to 48 hours later. So, and also the get rich quick stuff. We live in such a world right now where attention spans are so small. Everybody wants instant gratification. Everybody wants everything done and get the results instantly. So, and all of these get rich quick pitches that people are getting is speaking to the collective, us as society, because everybody wants everything now, right? So there's no get rich quick, but there is get wealthy for sure. So what's wealthy for sure? What's get wealthy for sure? So explain the difference between savings, investing, speculating, and gambling. So the get wealthy for sure strategy is when you are building a supercharged savings system with life insurance. You create your very own banking system with specifically designed life insurance policies. And people ask me, MC, what is the one thing that you've done in the past 2 decades now that has made all the difference for you as a business owner and an investor? And my answer every single time without flinching is the get wealthy for sure strategy, infinite banking, bank on yourself, private reserve strategy, whatever the name you want to call it. It's using a specifically designed life insurance policy, dividend paying whole life insurance policy with a mutual life insurance carrier. Top mutual insurance life insurance carriers have been around since the mid 1800s. They have been profitable every single year since the mid 1800s, paying dividends, which is a form of profit sharing, to their shareholders, which are policyholders, every single year since the mid 1800s. Now, if you think about what has occurred since the mid 1800s to today, I mean, we've had in the United States a civil war. We've had the creation of a central bank in 1913. Most of those life insurance carriers existed before the Federal Reserve system was even created. We've had a world war, 2 world wars. We've had massive economic and market crashes. We've had the Great Depression. We've had recessions. We've had changes in the global monetary system. The Bretton Woods Agreement was signed in 1944 after the Second World War. We've had in 1971, Richard Nixon taking the world off the gold standard. And then in 1974, the global financial system moving towards this petrodollar system, which we're still operating under for now. So there's been massive, massive changes since the mid 1800s, and these companies are still profitable and rock solid institutions. So that's why I just want to stress mutual life insurance carriers, not stock companies that are listed on the stock exchange that manage their the stock insurance carrier on behalf of their shareholders, the people buying their stock, like BlackRock, State Street, and Vanguard. That's who they're serving. So you need a mutual life insurance carrier, and you have a specifically designed policy, a dividend-paying whole life insurance policy with a mutual life insurance carrier. And with this vehicle, and in combination with many of them for you and your family, you can create a banking system, which is the supercharged saving system. So you're putting capital in these vehicles, taking on less risk for a more conservative return because there's a guaranteed of your principal that you're putting in. There's a guarantee for growth in these vehicles, contractually guaranteed. The life insurance carrier that have made good on promises since the mid 1800s contractually guarantees growth in these vehicles for you. And by the way, the dividends then also gets paid, which that's not guaranteed, but they've paid them since the mid 1800s every single year consecutively. They're around about 6% currently. And the growth in the dividends, it's tax-free. The growth in these policies are tax-free. You're never going to get taxed on the capital in there again through strategies. And then you can access the capital inside of these policies at any given point in time, tax-free, to use to grow your business, to invest in technology, to hire more employees. You can use the capital in these policies to capitalize on opportunities when markets crash. There's guaranteed access to the capital in these policies. Why is there guaranteed access to these capital in these policies, MC? Because the life insurance carriers have two pieces of collateral: your cash value, which is the capital, the savings, and your death benefit. You can add riders to these contracts, such as a disability rider, which means if you become disabled and cannot produce and create anymore, the life insurance company pays the policy. And then you have a death benefit, which if you were to pass away, pays out a death benefit, which is a multiple of the cash value, your capital in these policies, tax-free to your beneficiaries. So it protects you in the event of death, and then also in the event of disability. You can build these things into these policies. So it's a savings vehicle, a supercharged savings vehicle, which banks, corporations, the family offices, ultra wealthy and political elite are using to warehouse their capital, their savings. The sitting president of the United States, President Joe Biden, in a financial audit had to disclose he has 6 of these, by the way. He has 6 of these policies with a mutual life insurance carrier. That's where he's warehousing his cash. The reason we know this is he had to disclose this as the president of the United States. By the way, this is a private contract too. All of this is private. So nobody knows if you have it. It also had asset protection in most of the states. Every state is different, but in most of the states, it has asset protection. So if you're looking for something to provide certainty, predictability, right, and clarity, something that provides clarity to you, the business owner and investor, something that will give you confidence in an environment right now, which is very, very uncertain and very, very volatile. This is something to look at. This asset class, but the ultra wealthy looks at life insurance, by the way, as an asset class. They don't look at it as insurance. They look at it as an asset class. What this brings to your portfolio is it makes everything else better. How does it make everything else better? Well, your capital can do multiple things simultaneously. You can access the capital in these policies through a policy loan and use that to invest, let's just say, in real estate. Your value of your account is not drawn down. So if you have $100,000, let's just say in one of these life insurance policies, and you take a policy loan of $50,000 to invest in real estate, you still have $100,000 in that policy. You have a line of credit established against that. So you place that as collateral. You never draw it down. So you have uninterrupted compounding, tax-free in these policies. So it does many different things simultaneously, and you always have access to capital in the savings vehicle because you have guaranteed access to it. To access capital if you need it to add to a different position or fix another asset that you're having issues with. So in the past 12 to 18 months, a lot of investors, including yours truly, have lost some or all of their capital in some of these projects, investment projects and deals in the alternative asset investment space. And we have not had a crash yet. And if you look at where we are in the market cycle right now, we could see that there is extremely volatile times ahead. And there's a very, very high probability that we see a crash across all markets and all investment avenues. All of the big CEOs and big investors You can do your research. Just go to your favorite search engine. They're all going into cash. A story just broke this past week again of Warren Buffett selling off another significant position of his Bank of America shares, moving into one of the biggest cash positions of his life. We've seen in the family office space and also in the ultra affluent space, the high net worth families and individual space, a significant move into cash over the past 6 months. So everybody is anticipating that, and just by looking at the data and information available and looking at market cycles and how to see where we're at and in a market cycle, there is an extremely high probability that we see in the next 6 to 12 months financial chaos across the board. This isn't to scare anybody. This is just telling you basically what's going on. And not a lot of people are willing to share this on podcasts. So you should ask yourself, do you as a business owner and an investor have something in place that has incredible guarantees, that's predictable, that provides certainty, that gives you clarity and confidence? Will you be able to access capital when you need it most for yourself, your family, your business, and your investment portfolio? So that's part of the Get Wealthy for Sure strategy, is having certainty, predictability, and clarity. If you want a hard copy of the book, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably, I'm giving away a free paperback copy, only pay for shipping and handling. You could go to getwealthyforsure.com. That's getwealthyforsure.com. So again, Get Wealthy for Sure is the book. If you want a free paperback copy, only pay for shipping and handling, go to getwealthyforsure.com. It's also available still on Amazon. It's an Amazon bestseller. So if you want to buy it on Amazon, it's available on Amazon. Just type in Get Wealthy for Sure or MC Laubscher. And if you want to explore options for you and your family and your business of setting up your own banking system with the team at Producers Wealth, you could go to producerswealth.com/strategy. That's producerswealth.com/strategy. Thank you again for all of my listeners, my viewers, for spending the most valuable resource, your time, once again with me. Everything Cashflow Ninja is at cashflowninja.com, cashflowninja.com. And don't forget to sign up for the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo, by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.